In the meantime, Mauritius's headline inflation numbers hit 1.7% in June. That's its lowest level in the past 5 to 6 years. And we have the market now anticipating fresh data today. Earlier this morning, I spoke to Kishen Nadassen, Senior Research Analyst at CIM Stockbrokers, about their expectations ahead of that data release.
We are expecting the inflation to have bottomed out in June at 1.7%. And going forward, we will expect an increase in the inflation, particularly as the fuel prices would tend to go up, and also as the depreciation of the rupee against the dollars, which is our main import currency. This would impact on inflationary pressures in the second half of the year.
Well, in terms of outlook, what kind of band have you pegged out for the number as we progress through this year? Because we know that there are inflationary risks that persist because transport costs, for one, along with rising food prices, have managed to so far exert quite a bit of pressure.
Yes, indeed, they have exerted pressure, but on the other hand, we also import in euros as well, and we all know that when the euro is going down by so much, we are quite benefiting as well on the import side. But we would expect inflation to go up. And one thing interesting to note is that if we look at the headline inflation, it has gone down, while if we look at the year-on-year inflation, it actually bottomed out in October 2009. At 0.1%, and right now it has grown to 2.4%. So year-on-year inflation is actually on an upward trend.
Spelling what then, in your opinion, for interest rate direction as we move forward, where last month Mauritius's MPC left interest rates unchanged at 5.75%?
The main reason behind leaving the repo rate unchanged was the fact that we are expecting inflationary pressures to come in the second half. Local export operators were more favoring a decrease in the repo rate because they were suffering from the depreciation of the euro. But the central bank decided to maintain it at its current level, and we would expect it to remain at this level for the next two quarters to come.
Of course, inflationary risks aside, there's also the growth picture in the country to consider as well, where the entire Eurozone crisis and the movement we've seen on the currency front has severely impacted the tourism sector as a major revenue earner, but sugar players as well. So where do growth forecasts stand for Mauritius at the moment?
Initially, it stood at 4.6%, and right now the growth prospect is around 3.8%. And that's mainly, as you mentioned, on the back of the tourism sector, which is expected to post a lesser positive growth. We're actually targeting a growth of 5% for this year, and given that the tourism exports mainly towards the European market, 67% of arrivals come from Euro, so we are very much skewed towards the Euro. And the other sectors are expected to do well. The construction sector is expected to do quite well, the financial services as well. But then because we export a lot in euros, we would be the growth for this year would be of lower magnitude.